Hey everybody, thanks for joining us today to learn some stuff about interest rate drops and what that means to all of us. I am here with John Larson with Hartford Funding, who is our absolute preferred lender. And I thought we would just get some real information because we just had a rate drop last week. And that was a quarter point that the Feds dropped it. And that was our second one now, right?
Correct. Yes, thank you for having me.
Sure.
Yeah, we had a quarter point rate cut October 29th, and then the previous one was September 18th, which was a quarter point as well. And those were the two for the whole year.
Question that I get all the time is, does that quarter point, does that correlate exactly to my interest rate? If I've got a 6.25% interest rate right now, and the Feds just dropped it 0.25%, does that mean my interest rate went to 6%?
No, but an excellent question. One I get all the time, especially hovering around the dates that they're going to change the interest rate. No, they are not linked together. It does affect it indirectly. So really that's kind of the Fed dropping rates is in this side of the neighborhood and mortgage rates are in the other side. It affects the environment of the interest rates, but they are not directly related. What the Fed is dropping is called the overnight rate or the Fed funds rate, and that is a rate in which banks borrow money from each other. And really what you can look at too is prime rate. So when the Fed drops a quarter point, it will also move prime rate. And what prime rate is it's the Wall Street Journal prime rate. You can Google that. It started out at 7.5, and then with the 2 quarter point drops, we're now at 7. That affects credit cards, car loans, and your home equity line of credit. Your HELOC rate is typically based on prime rate. So the good news that would be directly affected with mortgages is your HELOC will come down slightly on that rate, but they are not connected.
And they're not exact either, right? So like the prime, it might be like the bank's offering an interest rate that's 1% below prime.
Yeah. So you're going to get prime plus one, prime minus one, that type of thing with your home equity line of credit rates. And those are directly linked to prime rate, and prime rate moves exactly in lockstep with the Fed cuts. But mortgage rates, not at all the same. And one interesting thing to remember about when the Fed cuts rates is it is broadcast weeks ahead of before they cut the rate. So we know that it's been baked in and priced into mortgage rates weeks ahead. Traders have been trading on that news for quite some time prior to the actual Fed cut. And when the cut actually happens, they trade based on what the Fed is going to do. Mortgage rates are going to react on what the Fed's going to do, not what they do. So weeks ahead, you're going to see rates come down and affect based on the Fed rate that's coming. Once the Fed actually cuts the rate, it's more about the post press conference or the comments that the Jeremy Powell has. And when he says things like we're unsure or any type of instability, you're going to see rates shoot up that day. So what we've seen lately is the Fed has cut rates and our mortgage rates go up. This is because we already knew previously weeks that they're going to cut the rate, and then you'll see rates lower and are stable. When they actually make the cut, then they come out with a press conference and make the comments on what they're going to do in the future. And that's why you'll see uncertainty and instability and rates shoot up that day. That's why a lot of us get a call that says, hey, the Fed cut rates, or rates lower, and we have to say, well, actually they're higher, and it's confusing. It's because
It's confusing.
right, mortgage rates are based on what the Fed's going to do, not what they have done at that time. So we, in the last 2 cuts, have seen rates spike up. Now, I think once the Fed cuts rates, it takes about a week or 2 for all the news to settle out, and then you'll see some stability in rates again right now. So one thing, a good thing to follow is the 10-year bond. So the 10-year bond is what mortgage rates really could follow if you want to look at that. And right now the 10-year bond's around 4.1, 4.089. And that moves daily, and that is a really good needle for mortgage rates. If you saw the 10-year bond go below 3, that is going to be a good sign. And you can actually see, I'll show you right here. This is the 10-year bond. This is when they announced the rate cut here, and this was low. Here is where they actually cut the rate, and it went up. Now, just if I put just for 1 week here, this is where you're going to see something is going on right now. This is the last couple days here, and now it's dropped. So looks like rates are on their way down. And this is going to be probably based on some news with the tariffs and the Supreme Court decision. Any type of big headline news is going to affect the 10-year bond, and that thing's going down, which is good for mortgage rates right now. There's no decision, but they must know something coming down the pike that we don't, and that's a good indicator on rates are looking like they're going to be improving. So I think the last week's Fed cut, excuse me, has settled out, and their rates are coming back down to stabilize.
Awesome. So more important is the 10-year bond for mortgage rates.
Yeah,
like everybody just really hears the Fed's dropping the rates or not dropping the rates and thinks everything's bad. Is there a correlation that we can use point value? Like you said, if it drops to 3, that's a really good number. Is it like 3 points above, 2 points above, or it just has no actual number?
Yeah, no, it's I think if you're at 4 and above, we were above 6.5% area for interest rates. We've come down to closer to 6.25 now, 6.375. If you had to just put a blind average on it. Of course, that's conventional 30-year fixed loans.
Right.
Government loans like FHA and VA loans, they're more down around 5.5%. So those are a little more attractive. If you were looking at the bond at 4% and above, I would say you're at 4 and above on the 10-year bond, you're going to be above 6. If it gets below 3, that is great news, and we haven't seen that in quite some time.
Right.
Back when the rates were super low, we were at 2 to 3 on the 10-year bond. So that's unrealistic. What we're going to look at is somewhere in the 3 range, and you're going to see great rates. So keep an eye on that. It's exciting to watch.
Well, watching interest rates is kind of an odd game too. I've always had this saying, buy the house, rent the rate. Most people don't stay in their mortgage rates for any length of time, although I find people basing decisions on whether they should buy or not buy on that all the time. And I understand when they got really high and they were already shopping, it priced a lot of people out of the houses they wanted to buy. There's a lot of people right now on the fence thinking that rates are going to drop, and should they wait?
Okay.
What are your thoughts on that?
I hear that as well. And that's something, but if you think about this, think to yourself, how long have you heard that? I've heard it for the last 2 years, and in the last year, 2 years, that I hear rates are coming down. Maybe we should wait. Rates will come down eventually. All right. House prices in my area here in Maryland, house prices are continually to raise. Okay. So if you just took a simple backed out from it and thought about it a year ago, I've definitely had people waiting a year and a half ago saying, well, I hear rates are going to come down. I'm going to wait. That's fine. But while you wait, your house still appreciates in value. Even, let's just take, for example, a $300,000 mortgage at 6.5%, and then lower the rate to 5.5%. So, I mean, that's a huge chunk of money to let go of $20,000 to save your $2,400. For my friends in Florida right now, tell me if I'm right, but there is deals to be had on housing down there right now.
Tons. There's, yes. Florida, yes. That market's declining, and there's a 9-month inventory here. Like, of all the places to not wait, this would be it. And people want to try and time rock bottom in the Florida market too. Well, if it's still declining, maybe I'll wait, get to the bottom. Nobody knows when that is, and then you miss great opportunities along the way.
You're right. And we as regular homeowner people in the world, we're not economists where we can time rock bottom. There is one thing that is for sure.
Usually by the time it's too late.
It's too late, right? So there is a time, I talk about it like the equity of a home and appreciation is like a train going by. And It's going by. You can jump on it here or you can jump on it too late here. At any time, if you can afford to buy and the interest rate is enough that you can afford to get into the home, get into the home. Jump on the train here and get the appreciation as it goes by. That is a smart move. You don't have to be an economist to time the exact right thing. If you can afford it, get in there. Refinancing is a thing. You can always refinance to a lower rate when that time comes. Is there a cost to refi? Yes, but it's not even close to the amount that it costs when you're buying a home. So a lot of people think buying a home, you have a bunch of closing costs and settlement charges in there. Refinancing is much cheaper as well. Okay, and so just like that example, if you make 20,000 in equity uh, in appreciation and you refinance, which is let's say 3,000, you're still huge amounts of savings in there versus saying, I'm just going to sit and not do anything until the rate comes lower.
What I
You brought
just
up a
heard
good
was
point.
you'd lost $17,000
That's
in equity.
exactly correct.
And that
Yes.
means that your purchase price that year later is that much more, which
When
makes
we
it
were
harder to
talking,
qualify for at that time.
right, and when we were talking offline earlier, you had brought up a great point saying, well, when the rates do drop lower, okay, what are you going to have at that time? One, like you said, a higher house cost, but you're going to have tremendous competition. I mean, if I'm hearing quite a few people say over these last 2 years, I'm going to wait till rates get lower, and let's say rates drop lower, you're going to have fierce competition,
Oh,
right?
yeah,
And then you're not going to get the home that you want right at that time either.
exactly. Exactly. Right now, there's inventory to choose from. There's less competition. But yeah, if you wait, all those buyers that are on the fence are all going to come out and you will be in competition for sure.
Yeah.
100%. I think that that philosophy is really important, to get out there. It's especially if you've got life changes and desires. There's a lot of people living in homes right now that they've long outgrown, that they, kind of got in and, had to spend a lot of time during COVID and realized they couldn't really live, work, and play, didn't really love where they lived and wanted to change it. And they're still hanging out there. So, you know, follow your dreams.
And interest rates are not 7% anymore, everyone. So
That's
yeah,
right.
it's definitely come down quite a bit.
Yeah. And just to reiterate that we're pretty close to 6% on a 30-year conventional
Yes,
fixed rate, right?
yes,
Yeah.
yes, that's correct.
Good. Well, John, this has been very helpful, very
It's my
informative.
pleasure.
I know this is like everybody's biggest question, and even me who's been doing real estate for, geez,
Yeah,
close to 30 years now, it's still confusing to me. So I've learned new stuff today too, and I appreciate it very much.
you guys aren't the only ones. Happy to help.
All right. Have a wonderful day.
You do the same. Thank you.